Recording. Okay, so welcome everybody to today's financial advisory webinar series. So for those of you who don't know me, that is myself, Tanya Hilt. I am a certified professional bookkeeper, and I'm the founder of Tanya's Bookkeepers Bootcamp and Cloud Bookkeeping Services. Lots of words there. A little bit about myself. I'm not going to read through all of this because you guys can read yourselves, but just to highlight some of the most recent accolades is I was found to be the recipient, I guess, of the 2019 IPBC Professional Leader of the Year Award. And for those of you in the States, the IPBC is the Institute of Professional Bookkeepers of Canada. So that's our Canadian organization. Our Bookkeepers Bootcamp did qualify for IPBC CEC Credits, and any organization that honors the IPBC, which I think they all kind of honor back and forth, for 2018, which that was a pretty big deal for us because we're the first member-run program that's actually been quantified for the credits as well. And we were the Intuit Global Firm of the Future for 2018 and the Canadian runner-up for 2017. Practice Ignition's Top 50 Women in Accounting for 2018, and we're also the recipient of the 2018 Inspire Bookkeeper Award winner. So there's quite a bit others. Those are only the most recent, so I'm not going to go into everything else because it's a little bit of a mouthful. This webinar has been submitted for CEC credits through the IPBC. There will be 3 polls. There was 2, but Justin's added a 3rd, so there will be 3 polls. And in order to qualify, you only need to answer 2 of the 3. It does not matter which 2. The answers do not have to be right, although when you see them, there's really no right or wrong answer. So we're not looking for 100% accuracy on anything as long as you've answered. The recording of the webinar will be emailed to you within 2 days, and any certificates for CEC credits will be emailed within 2 weeks of us receiving approval. Now, they do only meet monthly. We have had all of the other ones approved, but they're approving everything monthly. So any October webinars will not be approved or not even be submitted, I guess, until November because we're doing every single week. They've asked us to wait and submit all of them at once. They will be reviewed sometime within the month of December and approved. So as soon as we get the approval credit, we'll have those out to you within 2 weeks. They will be dated the day of the webinar. And of course, we today have Justin from CashFlowTool. And just there's the logo, and we've got today highlighted. I hope it's the 7th. It is the 7th, so that's great. I'm working with the right date. And then if you're just curious, there's the rest of our guests for the other weeks, which you should all have in your reminders anyway. So that is it for me. I'm just going to pop this out, and Justin, you can share your screen and take over.
Awesome. Thanks, Tanya.
Great. Thank you.
Fired up here.
Oh, and then just while you're doing that, if anybody has questions or comments, it's easier for us to track them if you actually put them in the Q&A portion versus the chat, because in that way I can track what we've actually answered and we can clear it once we've answered it. In the chat, if there's a lot and we don't want to interrupt Justin right away, sometimes it can get lost to go back. We do the best that we can, but it's just easier if you can please post it in the Q&A versus the chat.
All right, can you see this, Tanya?
We sure can. All right, I will mute myself and pass it over to you.
Sounds good, thank you.
Thank you.
Just to reiterate on what Tanya said, ask as many questions as you guys want. We love answering those things throughout. Also want to make sure that we get to them all. So definitely feel free to sprinkle those in, and we'll tackle them as we go and also go through them at the end. So I want to thank you, Tanya, to having us here as part of the Financial Advisory webinar series. We're thrilled to be here and to talk to both your members and the greater public about a topic that's really important for businesses, being cash flow, and most importantly for you guys watching, how you can use cash flow services to build your advisory practice. So we're going to actually talk about some very tactical and practical steps for you to use a tool like CashFlowTool to build your advisory services practice using a tool like ours and providing these types of services to your clients. So just a quick intro for me. So I am Justin Polgrano. I'm a CPA actually in the state of New York. I'm the VP of Sales and Partner Success at Finagraph. So that means that I lead our sales efforts, our sales teams, and also the account management team that works with all of our accounting partners. So when you guys become a partner of ours, our team works with you to be successful in the product. That's why it's called partner success. So it's very important to have that part of our company that works with you to make sure that you're successfully using technology. Now let's kick things off here. We can go to our first slide. Okay, so to start, most, if not all of you guys on this webinar are here because you want to grow your practice. And likely you have revenue and growth goals that you're trying to hit for this year, and probably planning out for 2020 as well. These phrases up here on the slide are probably things that you've been hearing for a really long time. If you've attended any conference, any other webinar, any podcast, read any industry article in the last 10 years, you've probably heard something along these lines, right? Focus on value-added services, move beyond compliance to advisory, and most importantly, do more for your clients. And if you want to grow your practice, you must do more. You probably feel like you're doing a lot already, but in order to get your firm to the next level, you need to start providing advisory services if you're not already. It's a huge opportunity for you. It's a huge benefit for your clients. But the question that a lot of people have is, where do I start? And so if you're on this webinar, if you're working with Tanya, you're already taking that first step, and that is awesome. You're already there, you're already on your way. We're going to talk to you about today specifically is how you can use cash flow services and a tool like CashFlowTool to get you started, to really take those first initial steps. So when we look at the agenda for today, this is what we're going to go through. The first is why help clients with cash flow at all. The second is going to be to define the actual offering and what it will look like for your clients. We're going to go through how to execute a cash flow meeting with your clients. I mentioned we're going to be very tactical here to teach you how to leverage a tool to actually provide a service to your clients. Then we're going to go into a deep dive of CashFlowTool. We'll walk through the tool itself, do a demo, take you through the features, and then we'll talk about next steps at the end and how you can actually take action on all this immediately. So Tanya, I have our first polling question up here, if you don't mind launching that. And this question is, what percentage of your current clients have you provided at least one cash flow report or forecast to? And this is just to get a little bit of a pulse as to who we have listening today, figure out where you guys are at, and then we can all kind of address some of the topics today based on that as well.
Perfect. So we'll leave this open, you know, as long as we see people still voting. Just don't forget that there will be 3 poll questions, one in the beginning, one in the end, one in the middle. You need to answer 2 of the 3 to qualify for your CE credits. Okay, so it looks like we've got, because I think that, oh, perfect, we've got 100% voted. So we will stop the polling right now, and I will just share those results.
Okay.
There we go.
Yeah, so we have, looks like almost half, 0%, that's mine here. That's awesome. Learned a lot today. 35%, less than 25, and then we have almost 20% who are somewhere between 25 and 50, and then more than half. So we have kind of a folks in all buckets, which is awesome. And this is actually great because the majority of folks here are in that 0% wanting to learn. There's also really practical steps on how to get to this.
And then if I look at
Okay, you started to cut out at the end there. Your voice just went away.
Better now?
Yes. Okay.
Awesome.
Okay, perfect. So I will go ahead and mute myself again until the next poll.
Sounds good.
Great, thank you.
All right. So first we're going to talk about the why. And it's important to start with why, especially when you're about to embark on adding advisory services or adding a new service offering or something like that to your practice. And so cash flow is important in all businesses. You guys have probably seen stats like these kind of thrown around in terms of the industry as a whole. Some of them are from a study that Intuit actually posted on their website, I believe, a few months ago. The first stat up here is 61% of small businesses regularly struggle with cash flow. That's a pretty high percentage, pretty alarming when you think about it. And in particular, I like stats are, what they are, right? Statistics and surveys and things like that. But I like putting it into the perspective of you guys and your clients. So when you think about your client base, whether you have 10, 20, 100 clients, there's a chance that a good portion of them struggle with cash flow, whether they are communicating this to you or not. This is an area that a lot of businesses struggle with. And if this stat holds true in your own business, let's say that you do have 20 clients that you're working with, that means 12 are having trouble in particular with cash flow. And those are opportunities for you to help, opportunities for you to use a tool to provide them the help that they need. Some of these other stats, we have 82% of business failures are due to poor cash flow management skills and an understanding of cash flow. That is talking more to once a business goes under, right? What is the actual cause of it? So that's a pretty high percentage as well. See 69% of small business owners have been kept up at night by concerns about cash flow. That's another one to think about in terms of your own client base. Not all clients are communicating that these are the problems that they're having, but they are in the back of their head. And then the last one here, 43% of small business owners have been at risk of not paying employees by payday. That's like that's a fear, I think, of a lot of business owners. And again, put that percentage onto your clients and think about that from that perspective. A couple more for you here before we dive into some of the details. So JPMorgan put out a study that talked about the median small business owner, or the median small business, and particularly around how much cash do they have on hand. And the median small business holds an average daily cash balance of $12,000. That's not a lot of cash. You can also see that 50% of small businesses have less than 30 days cash on hand. I think it was actually around 20 some odd days, which is a pretty alarming stat when you think about a business and their ability to sustain a change in their business, right? What if their largest customer takes a little bit longer to pay? What if they have a big expense that they were not expecting? Having stats like these and translating it into an individual business, when you are sitting there with only $12,000 in the bank or only 25 days of cash on hand, and something like that happens, that puts a huge strain on your business. And it's really important for us as accounting professionals because we have the wherewithal, we have the expertise, we know our clients' businesses. We can prevent all these things from happening or help prevent it from happening simply by being that overwatching professional or overwatching advisor to our clients to help guide them in the area of cash flow and their finances. So the last two things I'm going to throw up here, this should be no surprise to any of you guys, just in terms of expanding advisory services. So 83% of accountants say their clients expect more than 5 years ago. A lot of times when I'm talking at conferences, I ask people to raise their hand if their clients expect more than they did 5 years ago. An overwhelming 100% always raise their hand. So at 83, this should not really be a surprise for anyone who's on the phone here. Also, a good chunk of your clients expect you to provide business advice. So some of this is just providing that underlying basis for why you guys are all here. But it's really important to understand or identify how to take those first couple steps, and that's exactly what we're going to go through today. We're going to make the case for as well why cash flow, and particularly focusing on that area, is going to be the best first step that you can take to building out an advisory practice. So obviously today we're going to talk about CashFlowTool, and we're going to tell you how you can use it to grow your revenue, forecast your clients' cash flow, really show off your expertise to your clients. We're going to show you how easy it is to implement as well as we go. We're going to start this by defining the actual offering, defining cash flow services. And this really comes down to 3 different components. And this will really make up a comprehensive cash flow service offering. The first is around cash flow forecasting and cash flow management. This is going to be, you're going to build a forecast based on historical information and knowledge of upcoming events. So you can use your clients, what they know about the future, but also your expertise and your knowledge of their business to help them build a forecast. This will help your clients make decisions proactively and confidently, and help you, most importantly, become a proactive advisor. We're going to show you how to do exactly that. Scenario planning. This means understanding the financial viability and impact on cash position of upcoming events. Hiring a new employee, buying equipment, launching a new marketing campaign, helping your clients answer that question, can I afford it? What does my cash level look like before and after making a decision like that? Helping your clients plan ahead and get away from that age-old tactic of making decisions that have a huge impact on the business 3, 6, 9, 12 months from now by looking at just the cash balance today and making that decision that's going to affect the business. The last is tracking metrics and KPIs. So another thing that allows for a real proactive response for you in helping your client, but also your client in acting proactively in their own business, is by tracking metrics and tracking certain things over time so you can identify if there's an issue in a particular area. So how long does it take your clients to pay? How fast are you paying your suppliers? Some of those are really good indicators when you're looking at them over time if there is an issue that you want to get ahead of. So as I mentioned, these 3 components is really what makes up cash flow services as an offering. And as you guys probably could have gotten or come to the conclusion of based on what I said earlier, CashFlowTool very easily fits into these 3 components. Now, the question that I get from a lot of folks is, how do I actually go ahead and pitch this offering to clients? And people will demo our technology or see our technology or see any technology, right? But when it comes down to actually using that to pitch a service to clients, that is something that any professional needs a little bit of help with, especially the CPAs out there, the CAs. Getting into sales is not exactly something that we all signed up for when we became bookkeepers, we became accountants and things like that. So we're going to help you actually sell the offering. And it starts with telling your client, here's what we will do for you. And so this is going to be really layman's terms, easy to understand bullet points where you can describe to your client what cash flow services is going to mean to them. So feel free to, you're going to get the slides as well, but feel free to take these down, take a screenshot. We've had a lot of folks, when we're talking at conferences and stuff, they're taking pictures of this because you can put this on your website, use this in proposals. This is how you're going to describe your new service offering to clients. The first point here is to track, and this is you talking to your client, right? We're going to track your company's cash flow so you always know where cash comes from, inflows, right? And how it's being spent, outflows. Easy to understand, right? That's the first thing that we're going to do for you, is you always know where cash is coming from, where it's going. The second is we're going to keep current a rolling 6-month forecast so you can see the cash impact of business decisions that you need to make. So all those decisions, all those goals that you have for the business, we're going to put them into this forecast and keep it current so that you know that you have the cash to cover it. You don't fall into a situation where you're scrambling. The third is we're going to track and provide reports to you on relevant KPIs and metrics that are critical to cash flow. And then the last component here is review this with you on a scheduled ongoing basis to help you work towards your goals. So these are 4 really important points. Again, we put this into language that our clients can understand. They're going to feel confidence in you and the services that you can deliver based on the language that you are providing them, right, and how you're positioning it. And this is a really important thing to note down and position it this way because your clients are going to see the benefit right away. Now, we're going to go into next is going through an actual cash flow meeting. And you're going to see some screenshots from our tool throughout. And that's just to give you the actual use case of using a tool like ours with a client and how you can execute on it each and every week or each and every month. And once we go through that, after we go through that meeting and you see the practicality of that use case of it, then we're going to dive into the tool itself and go into that detailed demo. So I'm going to skip to the first step of the cash flow meeting. So there's going to be 3 different things that we're going to go through in a cash flow meeting. What I mean by a cash flow meeting is a scheduled touch point with your client to discuss these 3 different things. The past, or what happened from a cash flow perspective. Remember, cash inflows and outflows, where do they come from? Where do they go? Where did our cash go? The present, which is going to be where are we today? And then the last part is going to be the future, or where are we going? And that's really where the forecast comes into play. Now, when I talk about, again, the cash flow meeting, this is something that you're going to schedule with your clients, and the cadence is going to depend on their needs. So we get a ton of questions around pricing as well, how to price, what different variables should be considered. I know that Tanya helps her members with some of that stuff as well. But there's a couple things that you want to consider when you're pricing a service like this. In particular, how complex their cash flow is. If there's a lot of regular recurring items, there's not a whole lot of fluctuations, that's going to be easier than if they have high variabilities and they're all over the place, right? They have a ton of different customers and vendors to manage. The second thing is really the frequency. And so that gets into the scheduling of these cash flow meetings. Some of our accounting professionals and some of our bookkeepers who use the product, use CashFlowTool, sit down with their clients every single week to go through this. This could be a quick 15-minute meeting to go through it. But they will do it on a weekly basis because that's what they need. We have most of our accounting professional partners who do either bi-weekly or monthly. And monthly is probably a similar cadence to what you guys are doing anyway. That fits well into accounting periods and things like that. Some of you guys are doing the bookkeeping maybe even on a monthly basis, so this will line up well with that. But the idea here is when you're producing these deliverables for your client at the end of each month, for example, you'll also schedule in this meeting to talk to them about cash flow. And you'll leverage technology like CashFlowTool in order to do it. So we're going to go through actually these 3 components quickly: the past, the present, and the future. Give you some talking points and some things that you can use when you're going through this with a client. Again, you'll see these screenshots of CashFlowTool throughout, so you can reference them easily once we get into the detailed demo. The first thing is to talk about the past. So each month, we're going to sit down and go through our cash flow meeting with our client. We're going to talk about what happened. So in this particular example, we're sitting down with our client in the beginning of October, and we're going to talk to them about what happened in the month of September. So you can see here we have the chart that we use in CashFlowTool to show you the historical trending of cash flow and the cash balance. And then we also have the forecast period that we'll get into in a second. But first, we're going to focus on the past. We're going to talk about what happened. So here's an example of how you can talk through with your client about the past. What happened last month in the month of September? So we're going to say, let's say my client's name is Deborah and she owns this business. We're sitting down with her at the end of September. We're going to say, Deborah, let's talk about what happened last month. Your cash balance decreased by $7,700 from $36,000 to $29,000. Here's what the major drivers were. We had cash inflows of around $13,000 that came from the following customers. We had an inflow from Jake Thomas. We collected on that invoice. We've been looking to collect from them for a while. We had Tingy Worldwide that came through and put in a deposit for the project that we're working on with them. $1,100 from Matt, and about $3,500 of other inflows. We had $13K of inflows that came in. On the outflow side, we had $20,000 of outflows. So we had that net decrease of $7,000. And that was contributed, or the contributors to that was an owner draw that you took out of $11,000. We also had payroll for your 2 employees who are in your actual office. Also paid off a credit card and some other outflows throughout the month. Now, Deborah, as we discussed before, it's really important for you to understand where cash is coming from and where it's going. That'll help you plan better for the future and you can make better decisions. So we always want to start these meetings by just telling you about what happened last month to help bridge to where we're at today. Now, what I just said right there, one, hugely valuable for your clients. I think that us as professionals definitely take for granted the power of numbers and putting a story around it. In this particular case, every single person on this call can do this. We are just talking through the change in cash and what the major drivers were. All of you guys can do this and it will add value to all of your clients. Now, the purpose of going through the past are these points right here. So it's one, to evaluate the performance of our progress toward goals. So we're going to be talking to our client every single month, right? Going through this. If we talked about collecting on that $5,300 from Jay Thomas, we can give the update here. Guys, we collected it, great. Or we didn't reach the goals that we wanted to reach to last month. We'll be able to check in on prior action items and just give them and ground them overall in where they're at today by what happened during the last month. Now, let's go to, and also, last point, bridge the gap from the last meeting to today. So as you're doing this in a particular cadence, then you'll be able to bridge where they were the last meeting to where they are today. That's why we talk about the past. The next piece is talking about the present. So where are we today? And again, you'll see these screenshots from CashFlowTool will give you the cash balance as of today, the AR and the AP. And this is how we're going to talk Deborah through this as well. So our cash balance today is $35,943. We have AR and AP of the following. You can talk through what is outstanding, and then you can go through some of the items that have been particularly aged from an AR perspective, and also on the AP side, what we actually need to pay. So this is really getting into a little bit more of the cash flow management standpoint, helping them understand what needs to get paid, what they need to collect on, and things like that. You can even talk through at this point some different metrics. So maybe how many days cash do they have on hand? And that's a number that you'll want to track over time as well. So we talk about the present, we talk about where they're at today. That will help ground them and help them understand where they're at, and then we can talk about where they're going. Purpose of this, help make, and I put in parentheses, some decisions and determine where to focus. You can't make all the decisions based on just the data point of where they're at today. And unfortunately, that's what a lot of business owners do currently if they don't have a good handle on a forecast. This talking about today will also help them understand the starting point for the actual forecast itself. And that's what we get into when we talk about the future. So when we're sitting in the beginning of October, we're going to talk about the next month's forecast in October. And that's going to include a couple different components. And you'll notice this throughout our tool as well when we talk about the different inputs of what we use in an actual forecast. So we will pull in all of the AR and AP that I just talked about on that last screen. We'll use all of the invoices and all of the bills that are in QuickBooks, and we will forecast that out automatically for you based on the payment patterns of each individual customer, and then the payment pattern of the company itself, or your client, to each individual vendor. So we'll include all that for you in the forecast itself, all of AR and all of AP. We'll also put in these automatic forecasted items, inflows and outflows based on the historical data that's been analyzed by CashFlowTool. So you get to shortcut this forecast by using a tool like ours, pulling in the actual data, running analysis, including AR, including AP, and populating the forecast with auto-forecasted items for you. And then you can make your adjustments, make your tweaks, do whatever you need to do as you sit with your client. As we're talking through the future with them, this is going to be a real-time view of the short-term forecast. Now, I'm talking very specifically about the next month, because when you're talking about doing a cash flow meeting with a client, you want to keep it in those specific time frames. So you talk about the prior month, you talk about today, and then you talk about next month, because the next actual step is going to be doing a little bit bigger picture. But this is a screenshot actually from an Excel export that our tool produces that I'm going to show you guys today. This probably looks like, if any of you guys are doing cash flow forecasting manually, I imagine it's in this template, or a template that looks like it. Starting cash, breakdown of inflows, total inflows, breakdown of outflows, total outflows, net cash, inflow, outflow, and then ending cash. Right? It's a pretty standard format. You can produce that from our tool automatically. By producing a forecast on an ongoing basis, you're going to help your client make informed decisions and plan for gaps and surpluses. So the last piece of this meeting before we dive into the demo and show you actually how to do this in our tool is to bring it all together. And so this is the chart screen in CashFlowTool. You can see that it includes all elements of both the past, the present, and the future. And what you're going to want to do when you finish these meetings is finish it with this extended view. Give them that 6-month forecast in addition to just focusing on last month and the next month. And this will help give your clients that clear picture of the past and the clear picture of the future so they can plan for and manage any situation that arises as they go forward. Now, I'm going to launch our next, or Tanya, you're going to help me launch our next polling question, which is, so I've talked about the actual cash flow meeting and that service. And I also talked about, we get a lot of questions around pricing. So I'm going to give you some insights there and how our partners are pricing. But I want to know, for you guys listening today, how much would you charge fixed price monthly for providing these services? So we have a few options up there.
All right, now while we're waiting for everybody to go ahead and answer this poll to give a little bit of time, there has been a question that's popped up. So Dominique has said that she knows her clients can benefit, or that I know all my clients can benefit from such a tool. Most of my current clients are tiny services-based corporate owner-operator with an annual revenue of $75,000 to $150,000. Some clients are in the $500,000 to $1 million. Very few are in the $1 million to $5 million revenue level. So all of her clients are service-based. Most think that they don't need cash flow planning. They think they need more clients, bigger jobs, more employees. Few understand the value of cash flow analysis. So her question on that is, and you can probably see this yourself in the Q&A if you need to, Justin, but question 1 is she would like to learn how to qualify her minimum threshold for client business metrics, such as revenue, gross margin, asset margin, and or growth plans for who would be an excellent fit for your tool. Mm-hmm. And question 2, are there specific owner values or personality traits that you find are better suited to your tool? And 3, are there specific training prerequisites such as understanding a financial statement to understand cash flow planning?
Wow, those are 3 awesome questions, Dominique. And I'm going to address all of them as soon as we get done with this polling question, because I want to. Perfect.
Okay. So, and I'm assuming you can pull that up and you can see that yourself as the panelist. Perfect. Okay, great. Okay, so I'll just mark it. Oh, shoot, I just marked it done. So you might not see
it.
That's
okay.
Okay. Yeah. Okay, so that's fine. Okay, so now we've got 2 people left to vote. I will remind you that 2 of the 3 poll questions need to be answered in order to, doesn't matter which 2, but 2 of 3 need to be ordered and answered to receive your CEC credit. So I will give 10 more seconds. So we'll count down 5, 4, 3, 2, 1. So we will end the poll. Oh, Fiona says the poll didn't pop up for her. Okay, so I'll just read this out. So if the last 2 people didn't pop up for you, then you can put this into the chat. So I'll just read this out loud. Approximately how much would you charge as a fixed price for providing cash flow services? Less than $100 per month, $100 to $249 per month, $250 to $400 per month, $400 plus per month, or no idea, help. Okay, so Fiona's answer. So I'll make sure that that qualifies you for the answer then, Fiona. Thank you. So we'll end the poll. I'll share those results, and then we've got 1 more to add into the 100 to 249.
Got it.
I better make note of this so I don't forget about that.
Yeah, so we had about 40% with Fiona's answer. Probably that's in the 100 to 250 range 20% in 250 to 400, 0 in 400 plus. That's notable. 12% less than 100, and then 32% in no idea help. Now, this is a tough question, right? If I had a answer in here, Tanya, that said it depends, then I imagine that would have been 100%, right?
Right.
And
Right.
that's 100% true. Now, all of you guys, when you were probably answering that question, were thinking in your head of the handful of clients that would benefit from this and what they would actually accept as a price, right? Because that's how most people go through it.
Exactly, and it's interesting with that question because we've been working with several different over the years of the financial tools, and so we haven't actually implemented one, but we've been talking and trying to see how we can see this, and several of them are saying that something like this you could be charging $2,000 plus. Now, I don't I definitely don't argue that the value is not there, but our clients, like Dominique's, our clients are very small clients. They can't afford that. So the value might be there, but if they just plain old can't afford it, they can't afford that. so there is to it. So,
and that's why I put in those different ranges as well. Like, we find that our partners, especially starting out, fall somewhere in that $100 to $400 a month range. We have some partners who charge for $1,000 a month, but remember those different variables that I talked about in terms of the complexity of the client and also the frequency of you meeting with them, right? And so we coach our accounting partners to do an assessment beforehand, provide a range to the client so that you're not committing to a price before you know what you're getting into and things like that. But at the end of the day, it really is it depends. I was definitely not expecting 100% people to be in one bucket or the other. There are certain factors that you want to consider as you're going through that pricing decision. As Tanya, I'm sure that when you're talking to your members and trying to figure out how to price different things using value pricing and fixed pricing, there's no single answer, right? Which might frustrate you, but the important thing here is to understand what you need to assess, the different variables and things that you need to consider, and what a reasonable range is so that you can get started. Because once you have 5-10 clients who are on this, you're going to know how to price when you meet that 11th client, for example.
Exactly. Yep.
Got to start somewhere. So I'm going to dive into the demo itself. Dominique, I have all of your questions. I appreciate all the backgrounds as well. That helps a lot. Specific questions, but I'm going to answer it at the end because some of this will answer that in general. So I'm going to dive into the demo. So let me pull up my screen. Let me know, Tanya, if this pops up.
Yes. Yep. Yep. We can see it.
Okay. Fantastic. So this is going to be, we're going to dive into CashFlowTool. I'm going to show you how you can get to those different elements I was talking about before, looking at the past, analyzing the past, where you're at today, the present, and also the forecast, right, which is the most important part of this whole thing. But first, I just want to show you guys the first screen that you'd see when you log in. It's pretty common with apps to have this kind of landing page with all the clients that you attach to the actual app itself. So you'll have all the different clients that you have on the tool listed here. And the way that we do user management here, this is really important for you guys who have teams. You'll have your company account up here, and then you can actually invite individuals to each business. So Tanya, you can invite the folks that you work with. You can say, Leanne or one of your staff, right? You can invite them to 3 different clients in here. They'll have their own account where they log in, they just see 3 clients. So user management is really simple in here. And you can give people access to just the clients that they work with, and then you'll have your master account with everything underneath it. The tool itself integrates with QuickBooks Online and QuickBooks Desktop. It's really important on that desktop connection. That's something that at FinRev we've been doing for like 8 years. So we have a really rock solid desktop connection. Really important for folks who still have those clients who are on desktop. I know a lot of you guys are probably in the QBO realm, but for those who still have those QBD clients, we can still work with them. Also works with Right Networks, hosted environments. If you have files on servers and things like that, works through that as well. So that's, again, initial screen here. You can see all the different clients that we have on the tool. I'm gonna actually look at specifically Applewood services. So I linked up this client right before we got on the call here. So all this data is just fresh right out of QuickBooks. And I'm gonna talk through how to actually read the data, how to interpret it, and go through the different features that we have within the product itself. Important to note, every time that we link to QuickBooks, whether it's that initial link the first time you're setting things up, or when you're refreshing the data later, we pull 3 different things out of QuickBooks. We pull income statements, we pull balance sheets, and we pull general ledger data. So really detailed general ledger transactions. So that, oh, and actually Dominique, I just saw that pop up. The FinaGraph integrate with 0. I see that there's QBO, QBDT, and Sage integrations. So Dominique, you may be looking at FinaGraph dashboard if you saw Sage in there. So Tanya and I were actually talking about this before we got on the call here. So FinaGraph, the company, we have 2 products out there for accountants. There's the FinaGraph dashboard, and then there's CashFlowTool. FinaGraph dashboard is old. It's been out for like 5 or 6 years. It's actually free in the App Store. And then CashFlowTool is where we've been putting all of our engineering time and resources and things like that. CashFlowTool is what we're going through today. CashFlowTool integrates with QBO and QBD. The FinaGraph dashboard has some other integrations, I believe including Sage and some others. CashFlowTool does not yet integrate with 0. That's something that we'll be doing in 2020. So getting back here. So we're looking at the cash flow forecast for Applewood services. The tool's brought in the 12 months of income statements, 12 months of balance sheets, and 12 months of general ledger transactions, detailed transaction level data. And we use that transaction level data to produce this chart. So this probably looks familiar from the presentation that we've been going through. You'll see the last 12 months of historical cash flow, and then the next 6 months of a forecast. You can also flip this. This is on a monthly basis. You can flip it to a weekly basis and view cash flow on a weekly basis. You can even zero into specific weeks if you'd like to as well. Now, the really important thing here on the historical period, because we use the general ledger to produce this, this is 100% accurate based on what you have on your balance sheet in terms of cash at the end of each given month, and also just the direct cash inflow and cash outflows for any given month, because we're using that super granular data. So if I was to click on the month of August in this circumstance, or actually just hover over it, you see that cash balance of $36,959. That is the cash balance on the balance sheet at the end of August. The cash in and cash out transactions represent every single transaction that increased the cash balances or decreased the cash balances during that month. We do this on the direct method, and we don't care how things are recorded in QuickBooks, because I know a lot of folks record journal entries that are affecting cash balances, right? The transfers, deposits. It's not just all sales receipts and checks. So we take all transaction types and we use that data to produce the cash in and the cash out details. The cash balance that we're using throughout this entire analysis is based on all of the accounts that are categorized as bank or as cash, plus undeposited funds. You can see here that you can very easily toggle off certain accounts if you have restricted cash or some sort of account that you don't want to include in the analysis itself. But that's how we're producing this historical. So we're taking the cash balances on the general ledger. We are taking any inflow or any outflow for those specific balances, and we're using that to produce the historical data that you see here. This chart is interactive in that you can click on different months or weeks if you're in the weekly view and see all of the detail underlying that particular period. So if I clicked on the month of September, then I'd see all of the data in September. And this is how I was getting to those insights and those points that I went through earlier in the presentation. I can talk through just the inflows that affected the cash balance in the month of September. And you can sort this. I know not all of you guys are going to have clients with 4 inflows in a month. It might be quite a few more. right? So you can sort this different ways, sort it by date, sort it by name, sort it by amount to have a conversation with your client. This is interactive. The chart is interactive so that you can actually have this live meeting with them. You don't need to prepare all these reports. You can actually just jump in here live and actually talk through it with them. We can talk through the inflows. We can talk through the outflows to let them know what happened last month, what happened in the last 3 months, for example. And you can click through, use all these filters so that you can create different views and talk about the historical presentations. Obviously, I mentioned up here the cash balance, but this is where we're getting into where we're at today, right? What's there from a cash perspective? What's an AR? What's an AP? And you can see the AR and the AP in the forecast itself by looking at the forecast period. So you can actually see in the month of October, this inflow bar here is made up of open invoices and also forecasted cash in. See the same thing in the next month. And you can see that also on the outflow side includes bills, or what's an AP, and forecasted cash out. So what I'm going to do is run a couple filters here to show you how you can really easily look at just what's sitting in open invoices. This is what makes up that AR balance, the 24,222, all of these invoices in here. I mentioned earlier, we will analyze the customer, understand how they've paid historically, and then put in a forecasted payment date based on the payment patterns of that customer. So you can actually, we'll give you that initial forecast date that you can adjust. So if you know, or your client knows, that Cindy is not going to pay for a whole other month, then you can put that in here and everything will update live. So this is where you can talk through what's in AR. You can have that conversation about what's happening today, right, or where they're at today. You can do the same thing from an AP perspective and see all the bills that are sitting in that AP balance, right? You'll also see things that are past due from an invoice or a bill perspective, and we can do the exact same thing. So let's say we're not going to pay this for a little bit of time. Push that one out. You're able to do that, and you'll see the forecast adjust as well. That's talking through the AR and the AP side. But there's a lot more to a cash flow forecast than just what's sitting in AR and just what's sitting in AP. So Dominique, I know you were talking a little bit about identifying the right clients and things like that. Just generally from an industry perspective, like I just talked through AR and AP, not all clients, not all industries use Invoice, right? Or even use the billing function out of QuickBooks. So what we've done is we've built this tool to really capture all the recurring inflows and outflows to produce a forecast for you that's 80 to 90% of the way there, regardless of what they have in AR and AP. So this will work in a restaurant just as well as it does in a service business that invoices just as well as it does in a construction company, for example. So when I clear selections here, let me go back to that filter. You'll see this populated forecast here. And Dominic, I know that was just one of your questions, so I'll address the others as we go. So you'll see the forecast populated here, which includes AR and AP as we just went through, but then you'll also notice some forecasted cash in and forecasted cash out. What the tool does is it will automatically forecast the customers and vendors that are recurring, that the tool analyzes and identifies as recurring in the historical period. So some examples of that is, say, I'll go down to Gusto. So paying payroll, right? And I'll pull up this one as well because that's going to be some owner draws that are a little bit more erratic. So we're pulling up payroll here. You can see that we pay payroll through Gusto, and you can see the historical payments for this particular vendor. So they're really, really low when we didn't really have anybody that we were working for us at that stage. We hired some folks. You can see we're paying $1,800 a month every 2 weeks. The tool will auto forecast based on that historical pattern. This is a recurring vendor. And normally payroll is not run through AP, right? But we see it hitting the cash balance from an outflow perspective every single 2 weeks, and then we'll auto forecast it in there. If you want to make adjustments to it, you can do that on a singular transaction basis, or you can add in your own items manually, or we can say, you know what, CashFlowTool, rather than you guys doing this automatically, I have more information than you do. I know that we're hiring someone else. And so we're going to put in, oops, can't really type there. We're going to put in a recurring transaction moving forward. And that's going to be the new payroll amount that I want to be considered in the forecast itself. So you can overwrite the auto forecasts that are being done, but we'll get you 80 to 90% of the way there with the auto forecasts that are being done. You'll see as I, oops, what did I do there? As I click through here to another vendor, it's not all these straight patterns, right? There's going to be some erratic behavior in terms of the actual historical payments that are made. In this case, this is the owner pulling cash out of the business. So you can see that we identify the trend that's happening, and that will actually carry forward into the future. And then you can make all the adjustments that I had mentioned before. But you'll notice that the forecast is populated for those items that are recurring, the recurring customers, the recurring vendors, those outflows on paying the credit card, paying your utility bills, paying rent. All that stuff's going to be in here, and then you can make some tweaks to it based on the changes that we were just showing you how to do. Works the same way on the inflow and the outflow side. We have some folks who like to go through, like the first time they link, they'll review the inflows and they'll turn off some customers, they'll add some new customers, so basically turn it into that budget moving forward. And then on the outflow side, things are like clockwork and everything's just running through CashFlowTool. They don't need to worry about it. But that's how we get to the underlying forecast that's shown here. And then when you're talking to your client about the forecast period, you can do it in a few different ways. You can work interactively in the chart the same way that we were talking through the historical data, or you can use a few other views that we have for you. I mentioned you can dive into the weekly basis here. We also have a calendar that's going to show you the daily cash balance forecasted based on all the underlying transactions that we were just going through. So you'll see this will have the individual day ending cash balance, how that's trending, and then the transactions that are going to occur on the day. So you can view that. That will be useful for your clients as well, different view. And then we also have reports. So this is what I was getting to a little bit earlier in terms of producing an Excel report. So this will take all that data, you can download it into a Excel forecast for you, and that will look nice and pretty with formulas ready to rock so that you can go through this with your client. This is exactly the output of the tool, where you'll have that starting cash balance out of QuickBooks. You'll have all of AR, all of AP, all the things that you're adding in yourself or we're auto forecasting. And it's all formula driven and it's formatted and it is ready for you to either provide your client as a deliverable or go through with them live. And that will help facilitate the cash flow meetings as well, because some folks are just used to seeing it in this format as well. You can do that on a weekly or a monthly basis. And you can also produce a PDF chart as well. You can produce a custom PDF that includes the chart that's shown here and also elements of the dashboards. So I know we're running up on time here, Tanya, so I want to just finish off the dashboards really quickly because then I can address some of the questions and whatnot as well. So the dashboards are where we're using the income statements and balance sheets to produce different metrics and things that you're going to want to track for your client over time. So we have some that are focused specifically on cash, days cash on hand, as I showed you before, AR/AP days. You'll see some calculations on working capital. You'll also see things like different ratios calculated and also just some trending that's on the income statements and the balance sheets, as you can see here. You can create a custom dashboard using our library of cards that we have. And then you can use this in conjunction with that cash flow forecast to go through that last element of that cash flow meeting, which was tracking KPIs, tracking metrics, and talking to your clients about that on an ongoing basis. So that's walking through the main features here. As I mentioned earlier, I didn't mention earlier, but you can actually see this in the slide deck. So you can go to cashflowtool.com/Tanya, where you can get both a deal that we're going to talk to you about, but also you can book a one-on-one demo as well. And we can go through more details of the tool, walk through your unique scenarios and unique client circumstances. And we'll do that together with you one-on-one. So I'm going to start picking off some of these questions here, Tanya, before I get into the deal and talking about our partner program and stuff. Does that work? Okay. So first, just going back to Dominique's first question.
We still have to. We've just got this. Still have your final poll too. So
yes,
forget about that. Perfect.
Right. Okay. We packed 5 minutes, but we got this.
Of course. Okay.
So Dominique, your first question was: want to learn how to qualify my minimum threshold for client business metrics to find out who's an excellent fit for our tool. So because of how flexible the tool is, there's not, as long as they're using QuickBooks Online or QuickBooks Desktop, that's really the first qualification, right, for getting onto CashFlowTool to begin with. Now, in terms of revenue, gross margin, asset value, growth plans, what I really go through with this is more aligned to the goals that your client has. If your client's looking to grow, or they are looking to add new employees, if they're looking to expand to a new location, they need to buy new equipment, like what's in the near term, the near future for them, and is cash flow going to be, where cash flow will be really important for them to analyze and keep track of from your perspective, right? What cash flow services can I provide that will benefit and help them work towards their goals? There's not really going to be a minimum or maximum asset value or revenue target that you really need to think about from that perspective. Second, are there specific owner values or personality traits that better suit for this? You can actually invite your clients to this and give them read-only access if you want. So you can use the tool and however makes the most sense for your client. If they don't like diving into stuff, don't give them access. Just walk through the tool on a Zoom like we did today, give them reports, talk through it with them. If they like getting into the detail, then you can actually give them access there. Are there specific training prerequisites, such as understanding financial statement? No, because we are doing things on a direct cash flow method, right? True cash in, true cash out. The beauty of the tool itself is you'll be able to talk through the customers and the vendors, the inflows and the outflows and things that they're talking about or thinking about on a daily basis anyway. So there's no prerequisite for your client or for you to use the tool in terms of knowledge of the detailed financial statements, because we do everything on the customer and vendor level. Okay, let's see here. Does it link with budgets and projections? Can we use our own projected revenue, not system-based projections? So it doesn't link to budgets that are in QuickBooks specifically, but we can show you in the tool, and this is part of our partner program, is getting you up and running, how to input that stuff quickly into the tool itself. Can you forecast for a brand new business that has no history? How much historical data do you need? Can you forecast for growth? You can do brand new business. It will use as much history as is possible that we have, right? If you have 3 months, 6 months, that's fine. It'll use that to produce the forecast. You'll probably just need to add in some more manual things on top of it in order to capture it. Let's see. Some of our clients are running behind on their AP or taxes due. How is this unfunded or unpaid cash outflow shown? So if they are bills, you'll see overdue bills and you can adjust the date. Otherwise, you'll just have to add in those items manually, right, as outflows. But that's a really important factor because you want to be able to plan those out for them as well. So Dominique, I know you have some more detailed questions, but I feel like you and I should book a one-on-one. I can go through those. So Tanya, I have one more quick slide before we talk about the deal and everything like that. So bear with me.
No worries.
We have an excellent partner program. This is a huge selling point for us to accounting and bookkeeping professionals. We talked about the technology today, but I also talked a lot about process. Now you can actually take the first steps to doing this with your first client, your second client, your third client, things like that. The partner program is all of the support, resources, training that you need to execute on the actual technology. So we have resources for you, how-to guides, videos, guides that help you get started, email templates for your clients. We do one-on-one training, monthly webinars. We have a certification. We also do, we have ongoing support in our product, email, one-on-one Zoom meetings. There's a lot of value in the partner program. And you get into the partner program simply by joining in one of our plans. Which gets me to the pricing ranges from 100 is our starter plan per month up to 400 a month, which is the highest plan up to 50 clients. But we do have a deal for everyone who's on the call today. And so that is 25% off the first 6 months in any of our plans. That expires at the end of the month. You've seen this little link down here. Go to cashflowtool.com/Tanya. You'll see the landing page that has Tanya's logo on there. It has the deal up there. You can book a demo and you can learn more one-on-one. And us and our team can answer all of your detailed questions. So Tanya, I think we can launch the last poll now that we're
Beautiful. And that's such a surprise. I had no idea that you were going to, put our logo on there. That's pretty awesome. Thank you. Right. We did have a white logo. Had I known, I could have sent you a white one. That's awesome. And this is a great deal. And thank you very much. Very, very good deal. So I very much appreciate that. Okay. So let's get this poll launched. And poll number 3, launch. Here we are. So again, reminder, 2 of the 3 polls are all that is required to have you eligible for your CE credits.
Yeah. Someone asked, can you go back to pricing? So I'm just going to throw that page up while people are doing that.
Okay, perfect. So this is how interested are you in adding cash flow services to your practice? Answers are very interested. Let's do this. Somewhat interested. I would like to learn more, maybe later this year, and this is not a priority for me. So I would be very surprised for anybody who's on the call if they actually chose the last option.
Yeah. I mean, you got to give a 4th option there. Right?
You do. And I think it's a priority for everybody, but they're still trying to prioritize because there's still so much to do and, and still learning and actually trying to see how this, how to implement it and then actually roll it out. So. Right. We've got 19 out of 22, so I'll give another, 10 seconds or so for the last few people.
Sounds good. And that's why also, just to reiterate on what you said, Tanya, I think a lot of people are struggling on where to start. And right. As I went through that cash flow meeting and how to do it, every single person on this call can do that. And I think that when you start having conversations with your clients about cash flow, you're going to identify other opportunities where you can help them. And that's why it's so important to have that first step. Have it in an area where a client's going to impact immensely.
Exactly. And that's awesome. Okay, so Karen can't see the poll. So Karen, I'm not sure why you can't, but go ahead. I'm going to read it out. Just stick your answer in the chat. I'll make sure that qualifies you. So how interested are you in adding cash flow services to your practice? Very interested. Let's do this. Someone interested, I'd like to learn more, and just short form it. Don't worry about typing everything in, that's fine. Maybe later this year, or it's not a priority for me. Very interested. Okay, perfect. I will make sure that qualifies you. If there's anybody else who can't see the poll, go ahead and do that. I do have a report that tells me who's voted, who hasn't, so that's fine. So perfect. You're welcome, Karen. Okay, so I'm going to end the polling now then. We'll share the results. Perfect. So hopefully everybody can see the results.
Awesome. Yeah, for those of you also who are in that somewhat interested, I would like to learn more. Like I said, we are happy to spend time one-on-one talking about your business, how you can fit this in. If it's a good fit right now, you can book that by going to our beautiful landing page with Tanya's logo on it.
Yep, exactly. And just make sure that if you pick that, you will not be contacted because these are really anonymous. So make sure that you don't assume I'm giving this to Justin.
That's why I'm telling you.
Exactly. Don has just put in comments. He's already has CashFlowTool and really likes it. So
awesome. Thanks, Don.
Okay, and then there was just one more question that popped in before you go back, just with regards to the pricing. Attell wanted to know if this is in Canadian pricing, or if this is just US.
This is USD pricing.
Okay.
Did that come through?
That was on chat, not in the Q&A.
Oh, okay.
Yeah.
A lot of screens to watch.
I know, right?
Okay.
So the next thing you need is, now that you've launched in Canada, is you need Canadian pricing. Because the
Yeah.
problem with Canadian pricing is we never know where the dollar stands, and that's so
That's right.
hard with some apps,
Yeah.
you know, to price appropriately, because we could be sitting at, you know, 25%. There's times when we've been at par. We could be as high as 40% exchange rate. So
Right.
that's information to take back for the Canadians.
Yeah. No, you're absolutely right.
Yeah, absolutely. Yeah, Tel completely agrees. So thanks for bringing that up. But it can make a difference for sure. And, you know, Allison's pointed out clearly the quality of the data in QBO is crucial, and it absolutely is.
Yeah.
Absolutely is. If you want accurate numbers, you need accurate data.
Yeah.
Clean.
We've actually, like one way to pitch to clients a tool like this as well is exactly that, on the accuracy of the data. If they're doing the bookkeeping, right, you can show them the power of the tool and like, hey, here's what we can do with good data, right? And also, if you're doing the bookkeeping, they're just really slow giving you stuff and things like that, right? It's a really good incentive to say, you know, when we have good data in here and we're able to record things accurately and timely, then we can provide you value like this. So people kind of use it in the reverse, I should say, to get there. Awesome.
Yeah. Exactly. And then Allison's just added, so these are just chat. I know you're going back to the Q&A, but also the completeness of the data and getting the data from the client in real time. Absolutely. Because again, I think she was typing that as you were saying that.
Yeah.
So yeah, you were, I mean, great minds, right?
That's right.
Yeah. All right. So yeah, if you wanted to go back to the last few things in the Q&A. Dominique's got questions. She is awesome. She asks questions that I'm sure other people think of as soon as it's done. So I appreciate all the questions that Dominique asks. She's on a lot of the calls, and yeah, so it's ones that of course people probably think afterwards, oh, I should have asked that. So thank you, Dominique, for all of your questions. They're awesome.
Yeah. Should I just keep going through these questions?
Sure. Yeah, you can. If you can access them, you can keep going, and I'll just mute myself out. I know what I do is I just click answer live and then done as soon as I've answered it, and it gets it off of that page. So that way.
Yeah, that's smart. Okay, let me go through this. Answer live.
It's just easier to clear what you've done and just see the list get shorter and shorter.
Right. Yeah, it makes you feel like you're getting through it too. It's like crossing something off.
Exactly. And then you don't have to worry about going back, and that's what I like about that versus the chat. Absolutely. Right. So Diane's there. So great presentation. Thank you. So it looks like she's probably going to pop off. I know a few people have had to pop off.
Awesome.
And that's fine. And those that can stay for the rest of the questions, great. If not, just rewatch the end of it. Once you get the recording, I will not stop recording until all questions have been answered.
Okay. So Kathy asked, do you have a demo company to show a potential client? Yes, as part of the partner program, that is one thing that we offer, is we will set up a sample client for you and send it so that you can sit down with your client and walk through sample data rather than your own, right? Or whoever's QuickBooks that you're linking up. So we do provide that. Dominique has, I got to catch up on a few of your questions here, Dominique. The last one was around pricing. So just clarifying how this works. So here we have our different plans, and you can see that the differentiation between these plans is the number of clients that you're adding to the tool. So when we were on that first screen and you saw that long list of clients, right, that's what will determine which plan you're fitting into. So the starter plan, for example, is $100 a month. You can add your company for free, right? So Tanya, you'd be able to add your own company for free, forecast your own cash flow. Then you can add up to 3 clients, and then unlimited users refers to inviting your staff members or inviting your client if you want to. Now, we have a lot of benefits in the partner program, as I mentioned. Everything that's shown here is included in being a CashFlowTool partner, which means you're in one of those plans. But Dominique was asking specifically about something that we have called Partner Plus. Now, Partner Plus is a one-time fee to be in the Partner Plus program, and that gives you more access to our team, more training. You get also these courses for free instead of the discounted price. So you get a free certification, you get the free Cashflow Essentials course for you and your team. You get 90 days of one-on-one work to get you up and running in the actual product. So there's more one-on-one time, there's more training, and that's an additional fee. So that's $495 for the year. That's just like one annual payment. Whereas all of these are month to month and include all of the benefits that were on the prior page. So Dominique, I hope that clears it up. We should probably make it a little clearer on the website if you're asking that question, so we will do that. But I appreciate the question. So let me click that. What did I not answer? Okay, that's good. Awesome. Okay, Dominic hit a couple more specific ones. Direct method versus the Intuit indirect method was a hot topic in my tax accounting forum last week. Can you expand on the direct method and how you implement and present this? Yes, so when we say direct method, we are talking very, very simple cash in and cash out. As I mentioned in terms of like recording and stuff, like we don't care if it's an operating activity, financing activity, or investing activity. We also don't care how it's recorded. Journal entry, transfer, deposit, sales receipt, anything, right? So any transaction that is increasing the cash balance or those cash accounts we were looking at is a cash inflow. Anything that is decreasing the cash balances is a cash outflow. So it's a very simplified direct method from that standpoint. Cash in, cash out, doesn't matter how it's recorded, as long as it's affecting the cash accounts. So hopefully that clears up that one. Are there any, next question, are there any GL account best practices required for cash flow direct method, such as simplified accounts, no sub accounts, or no non-standard accounts? So that's an excellent question, actually. And the answer is there's no best practices to use our tool in particular, because we actually do everything on the customer and vendor level. So we'll look at the transactions in the general ledger. We categorize that by customer and by vendor. We basically produce a customer forecast and a vendor forecast for each individually that aggregates up. Now, the reason why we did it that way, rather than giving you the chart of accounts and forecasting out the chart of accounts, which is a common presentation that a lot of folks do, is one, it allows us to get another layer of granularity into the historical data. So we're looking at individual transactions for individual customers and individual vendors. Better insights, better forecasts from that perspective. The second thing is a lot of people change their chart of accounts, right? They'll move accounts around, they'll create a sub account, they'll start recording something, in one account month 1, another account in month 3, a completely separate account in month 4. And so because of that, we didn't want to rely on the chart of accounts and how things lined up. We wanted to get to the most important items within the data, which is the actual transactions that are increasing cash and decreasing cash. So we took that approach. So yeah, there's nothing specific that you have to do in your chart of accounts in order for things to show up in a nice way in cash flows. Last question for Dominique is, in Canada, we use either the bookkeeping account naming numbering system or the GIFI corporate proprietorship naming and numbering. How should we design the account names and numbers to work with your cash flow direct method? I think that's very similar to the last question. There's nothing specific that you have to do because of the level of detail that we're using to produce the data. Let me see, Tanya, I think I caught up.
I think so. Just Allison's notes as to why she can't see the questions. I'm not sure why you couldn't, but I'm glad that you could afterwards.
Yeah. Okay, Dominique has one. How are owner operator shareholder draws? How do these work? Most of my clients' cash out issues are the shareholder draw cash and shareholder draw personal expense. That's a good one, and that's definitely a challenge that a lot of folks find when they're helping their clients with cash flow. And so if you're recording those against equity, for example, And the other side of that entry is cash. You're still going to see it as cash out. The best practices that we work with our partners to implement for CashFlowTool to be accurate, particularly for big items like this, is just to make sure that the owner's name or some kind of indicator is put into that the vendor field. So if you had Dominique, right, if you're the owner and you put your name in there every time that you are drawing out cash, then it will analyze Dominique as a vendor and you can forecast out those draws as well. So it will be included in the historical or in the actuals because of how the detailed data that we're looking at. And then also, because it's in there, it'll auto forecast it, and then you can make your adjustments to it to help your client plan out when and how much those draws will be. Hopefully that's clear too.
I think that looked like about it. Oh, no.
Yeah.
There's a few more that have been added.
Yeah, so we have Dominic, I think this is just playing off the last one. So revise the vendor from the personal expense vendor to the shareholder name. So to shareholder name, exactly. That's how you do that. So Jason, what about multi-currency? If a client has bank accounts in both Canadian and US funds, how does this affect the forecast? So we don't have multi-currency settings in the actual tool. It'll just pull out the amounts that are shown in the general ledger. So if within QuickBooks, you have like the local currency and then USD, for example, or the opposite way, then you'll just see the amounts in whatever that end currency is. So if you're converting things into Canadian within QuickBooks, right, then you'll see the Canadian balances. If you're doing it the opposite way, then you'll see the USD balances, whatever's sitting on the statements and then the general ledger at the end of the day. Okay. We have one more. Mildred, can the reports be customized to show classes? So at this point, we do not have that capability in there. Again, best practices on how to track certain things. If you are interested in, if you do categorize things by classes or department or project or things like that, that's the sort of stuff that we'll work with you specifically on. Everyone does this a little bit differently, so it's hard to do like that catch-all, but we'd be happy to work with you one-on-one to help you make that work. All right. Okay. I don't want to talk too soon, but I think I caught up.
It looks like it. There's a bunch of great presentation comments and thank you comments. So yeah, I agree. I think you've caught up too.
Yep. Very cool. Bring this up as a reminder.
Yeah. So again, as Justin said, that I will be sending in your email. We'll have this link. He'll be sending me the slides as well. So I have the slides. And then, of course, this is still recording, so we'll not stop recording until we're all done. So all the Q&A, you'll be able to get all of that. And if there's anything else, Justin, that you want me, any other personal notes, whatnot, just email me by the end of business today so I can get that in and we're good.
Okay. Sounds
Perfect.
good.
All right. Well, thank you very much, everybody. We will see you all next Monday. Yes, I know it's Canadian Thanksgiving. We are having one. If you can't be here live, again, you will be sent to the recording. And then, Justin, we will see you on Wednesday.
Awesome. Can't wait.
Perfect. Okay.
Thanks, Tanya.
Thanks, everybody. Take care.
Take care, everybody.
Thanks again, Justin. Take care. Bye-bye.